Good evening, folks. Afternoon, morning, wherever you are in the world. Welcome to the live stream. We start in 1 minute's time, and I'm just checking that all the stuff's working. So give me a section of time. Just a moment. Hello, Joydeep and Martin. Can you just type in yes if you can hear me, please? Please. All right, fantastic. Thank you, everyone. Welcome to the live stream, folks. It's Tuesday afternoon, 2 o'clock. And what I'd like to do is to go through questions, really, and ask you what you would like to hear about. I've got a few things on my mind. And excuse me, just getting set up here. We're going to talk about a couple of things like gold, natural gas, crypto, and a couple of other things. So if you have some specific questions, just put them up in the chat box. And whilst we wait for everyone to come in. And welcome, everyone. 23 people here. So first thing I'm going to do is give away a few free memberships. And if you are active in this chat, YouTube will automatically allocate you a free membership, I think. We can do 5 at a time. So if you get the free membership, welcome and well done. It's out of my control. I don't allocate these myself. So whilst we're waiting for everyone to come in, you enjoy those memberships. Well done, Levent, Andre, Dan, some Eastern letters, which I can't decipher, and Peace, Sniper, Peace Sniper. Well done to all of you. Welcome to this live stream. And when you get a notification from YouTube saying, please renew your membership, please do so. It costs $1 a month, and you'll get all the membership perks. So whilst I wait for your questions and whilst we go through the live stream, and assuming everyone can hear me, let's get started. And whilst we're on this page, let's start with stocks. So you may know from my previous videos that we're short on the NASDAQ, the S&P, and the German 30. Now, the S&P and the German 30 are still both in profit. The NASDAQ I've actually hedged. Let me just go through these quickly with you. The NASDAQ, after moving up through this local flat top swing high, forced me to hedge in case we progress much further and faster. This was moving up quite fast. So I got out of that short trade, not by taking a stop loss, but by hedging it. And I've taken an equal size position compared to the initial short. So we're short over there and long over here on the same account for the same amount. So effectively, we're out of the market with a very small gap between these two positions. Effectively, no skin in this game right now. But we do have 2 positions on, and I'm able to adjust these positions as we move along. So if we move up from here, and we sort of convincingly break above that little spike high we had a few days ago with a 1 up, 1 down candle, that's a reversal pattern. And until that's invalidated, it remains in force. If we close above that spike high, this reversal pattern is invalidated, and we shall then have to think about what to do next. I'm looking to get short overall in the markets. I do believe that we're still short. We still have a bear market until we break this double top swing high on the NASDAQ, the all-time high. We still remain short. And that's simply a technical play based on sort of understanding of CTAs and CMTs. Unless we make and close above this double top all-time high, we're still technically in a bear market. Now, these bear market rallies can often come back to 78.6%, which we've done already. Sometimes back up to the previous high, the double top swing high here, the all-time high, and that would make a double top. In this case, would be a triple top if we move down from there. And sometimes we can even get a little bit higher. And you can see above us at the top here, we've got a top 200 period Bollinger Band at 23 round, 23K. And also, if I zoom out a bit, you can see we have a long-term channel in place, which is still pretty much in force. We broke down below the bottom of it quite catastrophically with Liberation Day and the tariffs and all that sort of thing. We've bounced back up just as dramatically. We have not made a new all-time high just yet, and we've moved above that sort of level. But we are back into the channel. And why I point out this channel to you is because if we resume the what we've been doing for the last number of years and stay back within this channel now, the next target is back at the channel top. And that's all the way at 24,500 on the NASDAQ. So keep that in mind. I'm not sure if we're in a bear market. Technically we are, until or unless we make new all-time highs. The same goes across all the stock indices, except for the German 30, which I'll point out is a bit of a special case. So that's where we are. I'm short, but hedged on the NASDAQ, and I'm short, unhedged on the S&P, and short, unhedged on the German 30. Let's have a look at those very quickly now. So this is the S&P, and where we hedged on the NASDAQ after making a recent swing above that recent all-time high, well, sort of intermediate high, we didn't close above there on the NASDAQ. We didn't close above there on the NASDAQ. We spiked up through it, didn't close above it, although yesterday we may have just closed above that high. But on the S&P, we didn't close above that level, and we also made a spike high reversal candle pattern, one up, one down. We have not closed above there, and we haven't closed or even threatened to close. Well, I suppose we got a little close, but to our entry price over here, we got in at 59.50 roughly, and we're currently trading at 59.25, so very close to our entry price. But we're short on the S&P, short on the NASDAQ, looking for a move back all the way down to the swing lows created by Liberation Day. We're also short on the German 30. Now, this one's a little bit different because we have made a new all-time high. In fact, 2 days ago. Was that Friday? Could have been Friday. Yeah, Thursday last week, we made a new all-time high on the German 30, breaking above that double top previous swing high. In fact, that happened quite a long time before that. But look where we got to, just to the top of this channel. And this channel is the channel that we've been trading in for about 3 years. Even with that Liberation Day dip down here, we still didn't close beneath the channel. Very interesting. And we're right back at the top right now. Notice that on Liberation Day, we did get below the Bollinger Band and the channels and so on the NASDAQ and the S&P, but not on the German 30. So we're short on the German 30. We have two tranches, one taking slightly earlier, not knowing if we'd reach the top of the channel or not, but we did. We got to the top of the channel eventually. We took our next short position at the channel top precisely. So two short positions, both in profit, one marginally, one a fairly decent chunk of profit already, and we'll see how we go. Target for all of these is down below the Liberation Day lows and further down. If this is to be a bear market, these markets should carry on down. The other scenario is, of course, that we are now stuck in a range on all of these indices, and that range is roughly, and I'll just take the NASDAQ as an example, and I did posit this possibility earlier after having made this low a few weeks or a month or two ago. So we may now have formed a new range with the bottom being down here at 16,300. That's the Liberation Day low, and the top of the range being up here at this double top swing high, all-time high at 22,300. So 22,300 at the top and 16,300 at the bottom. Seems almost fantastical, doesn't it? Like this shouldn't be the case. Just got a message there, nothing serious. Shouldn't be the case. So we have such a huge range from 22,300 down to 16,300, but that's the range we've got. And it may be that that's more or less, maybe with a few spikes above or below even, but it may be that more or less this is our range for the next year, maybe 2 years, maybe 3 years, who knows. Failing that, the other alternative is that we are in a bear market and we will break this low and move much lower. Maybe down to 13,000 is one potential Fibonacci extension. The third alternative is that we're not in a bear market and that this bear market sell-off because of Liberation Day, tariffs, all that hoo-ha is now over and we can look forward to new all-time highs and that this market will carry on marching and soldiering up, perhaps up to the top of the channel again at 24,500 on the NASDAQ. So and that's also a Fibonacci extension, by the way. So those are the sorts of scenarios that we're facing us, and we won't know really until this gets moving. And we haven't really been moving for the last number of weeks, 2 weeks, I suppose. We've been stuck in a range at the top on the NASDAQ and stuck in a range on the S&P. The German 30 has moved up a little bit compared to the other two, but also now fading at the top of that channel. We have two other positions on at the moment, and I'm just going to wrap up on stocks, seeing as the market will be open in an hour and a half's time, hour and 20 minutes. We have a long position on MSTR, And we took these a couple of days ago, MSTR and NVIDIA. And actually, very luckily, despite the sell-off in the markets yesterday and the flip-flopping that you've seen on some of the other names, MSTR has actually held up pretty well, even though Bitcoin isn't doing sort of marvelously well either. So we picked two of the good ones to go long on. And it also shows that I'm not completely or totally convinced that we're in a bear market overall in the stock market and equities markets and the indices. And so I'm kind of hedging the shorts that I have across all three of these indices, NASDAQ, S&P, German 30. I'm hedging with a long MSTR. That's moved up slightly. Just moving down to the order block and the support level, the reason we got in, pretty close to the Fibonacci level. We've got the 50 period and the 100 period moving averages just below us. Big support level here. And my blob, which I had drawn in, I think 2 months ago now, both of these blobs, we finally got to them. Not quite to this one. We may have to retest it, but we've got near my blobs now, and we'll have to see which one comes next. Are we going to go down to the lower blob and move down through it and carry on down in a bear market? If that's the case, the indices will probably do the same, and Bitcoin too. Or are we going to move up to the top blob, which I probably need to move along slightly to get it more in line with where we could get to and the pace that we're trading at. So something like that. There's the top 100 Bollinger Band. There's a pretty intense and useful trend line right here, this purple one. And I put my blob right at the confluence of those two levels. We've also got the 78.6% fib above us there at 475. That will be the next potential stalling point, because we do also have a stalling point on a previous occasion at that level. So that's MSTR, and we're also long now on NVIDIA. That one also popped up yesterday. Look how some of these other names dropped down. Tesla, Coin, Google. Google popped up a little bit eventually yesterday, and some of the other names. But NVIDIA and MSTR, once again, just a bit of luck. I didn't choose these because I knew that they would be more supported yesterday. But as it happens, they were. You can see my green entry arrow there. And this has just moved down after excellent earnings report and gapping up a few times. We've done sort of into the blob that also had that blob drawn up a long time ago. And so we sold into that blob actually at one point earlier, quite a long time ago. But now we're buying at the dip underneath the blob. There's the 20, 200, 100, and 50 period moving averages. And there's no reason why we shouldn't get up here. This is the 78.6% fib. And if these markets are to move up, I favor NVIDIA and MSTR and a couple of others, maybe even Coinbase. You'll see some of the names I've got in here, Google as well, maybe. I'll look at all of these. But for now, bit of a mixed bag. Short on the indices, long on a couple of the key Mag 7 names. Now, talking about Mag 7 and Bitcoin earlier, let's have a look at what we've got going on the chart here. Bitcoin holding up, but not particularly well, really. I'm not going to talk about the other cryptos here. Ethereum and XRP, I'm long on both of those. XRP's popped up quite nicely today. But let's have a look at Bitcoin. I'm a bit of a Bitcoin maximalist, so I kind of trade off Bitcoin, what this is doing. I tend to trade in that direction, not only on the altcoins, but also in the stock markets. This gives a bit of a clue too. Now, we're stuck below the 20-period moving average and this red trend line, which I've got drawn on here on Bitcoin. We're trading at 105,000, so quite a nice recovery from 103 a couple of days ago. 1, 2, 3 bullish candles, making maybe yesterday wasn't a higher high, maybe fractionally, but let's just say it is fractionally higher highs, higher lows, except for yesterday again too. Bit of an inside day really, although it's kind of engulfed the previous day. So looking a little bit weak. Next support level is the 100 round number, the big 100 number. And below there, we've got 96,000 where there's a CME rollover, weekend rollover gap. And that's around about this green area, just around about 96,000 where we got that big surge. So for now, I'll be looking to add more tranches on back to 100. I took a little bit of size off here. As you may have noticed, one of my arrows is gone, the one from up there. And I'll add a bit more size back on down here at around about 100 and also at 96. 93 is the bottom of that CME gap. So 96 to 93 is another zone that we could look at to buy Bitcoin. Overall, I remain bullish. My targets, as I said in my last video yesterday, day before, is 125 and then 165, 163, 167, somewhere around there. And also, as I said in the previous video, these are Fibonacci extension levels, which are well known and well published, well heralded by the Bitcoin bro market. So everyone's looking at those two levels, which probably means the price won't get there. We'll get somewhere else instead. Where that might be, I don't know. Maybe a lot higher. That would be the most destructive if everyone gets out at 125 or 165 and the market just sort of skyrockets from there, goes on to 200, 250, everyone gets locked out. That would be the most painful scenario. For the Bitcoin bulls, that would be the best scenario. Most people are feeling a bit bearish on Bitcoin right now, so for them, it wouldn't be great. What's going to happen next? I don't know, but I do know that those two targets, 125 and 165, are probably not accurate, seeing as there's so many eyeballs on them. So we're long across all three here, XRP, Bitcoin, looking to add to Bitcoin at 93 to 96 and also at 100. And then on gold, I'm still hedged on gold, big surge on gold, but more importantly on silver yesterday. And gold moving up about 2.5%, silver moved up about 5% in the same period. So a big move up. Now we don't, once again, we're hedged on this, and I don't know what's going to happen next. My general overall continued idea is that we need to correct down to 3,000, a little bit above, a little bit below, and maybe 2,700 down here. But it's holding up pretty well. And this little bit of price action here looks quite bull flaggish to me. And there's nothing to say that we won't surge up even higher to new all-time highs, maybe 3,500, 3,700, 3,800 before moving down. At some point, gold will need to correct. Gold always does. Gold has a surge period for about 1 to 3 months generally. And then we normally see about I suppose a 3 to, let me be precise, 3 to 5.5 month correction period. So we're busy in the correction period now, and we've been going on since 21st of April, where we got here, 22nd of April. So, a bit of April, all of May, and a couple of days in June. So basically a month and a half we've been moving across the side of the page, and we should expect another month and a half on top of that, and that could take us down to these levels. However, we may have to actually make a new all-time high first. So I don't know. Generally, central banks seem to be buying a lot more gold again, all of a sudden back in the news last week. But and maybe that was part of the reason we had a big rally on a Monday, really, and we don't often see this on a Monday, but a big surge up on a Monday after all sorts of talk on the weekend. So we don't have a position on that apart from being short there, and fully hedged over here. You can have a look at the numbers on the right-hand side of the screen. At some point, I'll want to get long on gold. I do believe that gold is generally in a bull market, and we need to be long on it. But where to get long, I don't know. We have a long position from this yellow arrow, which is a full-sized hedge position against these two shorts. So we will be able to take profit on that long trade at some point if this market keeps on moving up and doesn't move down. And at that time, these two short trades will be in a greater drawdown. However, we'll then look to add some more shorts in at the top using the profit from this long trade. We'll take profit on that, use that profit to mitigate or offset the risks of adding a new short position on, and then hopefully ride the whole lot down. If that does happen, we may not get back to 3,000. We may only get back to the trend line. Let's say we surged up to 3,800. Let me just quickly illustrate that to you up here somewhere. I'll do it with an arrow. So somewhere up around this region here, and then the pullback may not get as low as that. We may only just pull back to this sort of trend line here, which has been forming for the last number of months, since the beginning of the year. So any move up to there may only pull back to where we are currently trading, at which point we'll be able to get out of our shorts, I suppose, and take profit on the new shorts we added higher up. It is possible, of course, if we do get much higher up first, we could still come all the way back down to 3,000. It is a big breakout point. 2,700 is the last big breakout zone. And so that's all beckoning, and we haven't had a retest of any of that just yet. So I don't know which way that's going to go right this minute, but I do want to be overall long, and I'd rather be buying down closer to 3,000 or even lower in order to get long. But we do have a long position hedged with short positions. Right. I hope everything's okay and that you can hear me. I heard a weird noise. Okay, seems to be all right. If there's anything untoward, just let me know. Good day, Nachlopsky, Razum. Nice to have you here. Right, now, so that's it really. And then silver at the same time, and this was always a hedge against the short gold position. So this is our silver trade. We're long from, I don't know if you can see that easily. There's a green arrow right in the sort of center of the screen right now. And we got long there at about 32.5. And yeah, I'm just trying to find out what's going on. There's a lot of noise coming through. I will find out eventually. I haven't quite mastered the software just yet. There's another one. Lots of them coming through. Not quite sure why. But anyway, folks, I'm going to send another 5 gift memberships while we're here. And once again, I don't allocate these myself, but they will be allocated to people by YouTube automatically. And if you do get one, well done. And please, when you get a notification from YouTube to say, would you like to carry on in about a month's time, you can just click on there, yes, I'd like to carry on. And for $1 a month, you can remain part of this community. So we're long from there on silver, 32.5, and we're currently trading at 34.2. Massive surge up yesterday. That surge yesterday was in line with a big surge in gold overall. We broke up above this recent swing high, which is very, very good. And it's moving up quite nicely now. Good day, Max, from the private group. Nice to see you. So, folks, I don't know what these noises are. Sorry about it if it's a bit annoying, but I think it's just people joining or memberships or subscribing to the channel. So welcome to all of you if that is the case. I really appreciate you joining, and all so good. So more and more of these things are coming through. Let's hope that's all new subscribers and not some glitch in the software. So silver, we've talked about gold extensively. So silver, we're only long on silver. We have no hedges. We're not looking to go short. I'm looking to stay long on silver. And we're moving up beautifully after that big spike down to the order blocks, down through there. That was the same day as Liberation Day, all the tariffs. And making a nice rising wedge here, a flat top with an ascending triangle, if you will, rising up from underneath. And we're approaching that top now. My target for silver, and I've been saying it for about since the beginning of the year, I think, is over 50, up towards 60. We're currently halfway there. So with a bit of luck, silver will keep on surging. And although we're hedged on gold and we're not making any profit on the long or the short side on gold because of the hedge, we're making it on silver. And we're also long on copper. We'll talk about that shortly. So the fact that we have a fully hedged position on gold doesn't matter, because when we get to the top at some point, if we keep on moving up, I can take profit on that long hedge and get short. And at the same time, we'll have a very big profit on silver, and hopefully we'll have a profit on copper as well. So we're now net long metals, although we're not net long on gold. That one is hedged. This is copper, and if the markets can keep on moving up, and if there's enough optimism, enough demand for copper for building, electrics, electronics, AI, transporting electricity, batteries, everything to do with that, if there's enough demand for that, copper should keep on going up. It's still pretty cheap. And if we look at the longer term picture, which I may not be able to do, I think I can, on Oanda, this is a weekly chart on copper going back to, 2013, much before that. And you can see copper's a zigzaggy sort of chart, but demand is constantly growing, and we're heading up more and more to the right-hand side. We could draw some trend lines or a channel in here if we wanted to. I'll put a quick channel in just to give you an idea of the sort of rising channel that we find ourselves in on copper. It's going to be a bit sort of rough and ready, but something like this, something like that. And we're approaching the top of that channel. So that's where we are on copper. We're long on that one from the green arrow, quite a nice position on there actually. We're long from 468, and we did actually get up to 532 not too long ago. In fact, that was a big recent not all-time, but recent swing high, and we could get up there again and exceed that. My target for this is about $7, something like that. It'll take some time. It is a zigzaggy sort of chart. Right, now going across to natural gas. Is there anything else I want to talk about here? We talked about copper, we talked about gold, we talked about silver, we talked about crypto. All of that is complete. Now let's go across to natural gas and uranium and Brent crude oil. Natural gas, and try and explain this to you pretty simply. I drew a fractal here. I was hoping for, this is just a fractal of what happened over there. If I drag that across to where we are currently, this is the sort of thing I'm hoping for, or was hoping for, until we adjusted our position. So it's just a repeat of that sort of fractal in the middle of the screen, something up there poking up through the order block, forming a false top break through there and then getting short. That's the kind of thing I'm looking for, and it's just really a pattern repeat from this previous fractal over here. However, that was what I had in mind. So we were, if you remember, we were short over here. We got hedged over there, and then we've just exited that hedge just about 2-3 hours ago. We took profit on that long hedge. We got long at $3.50, roughly, 352 I think it was, and we took profit up here at 372, 371, 373. Not sure of the exact price, but it's in my private trading room. We all know that. So 2 shorts there. We got hedged there, took profit on that long trade. We still have those 2 shorts open, and I'm considering adding another short trade right here. We got up into the order block. That's the 78.6% retracement of the move down from this top to the bottom. So we've come up to the 78.6% Fibonacci, up to that very thin order block, up to our original order entries, up to a place where we could take profit on the full long hedge trade, by the way, equal in size to the combination or the sum of these two. So this was a full position, and we've just taken profit on that at the top, about 18 cents or something like that. And we've now only got these 2 short positions open. I'm considering, as soon as we finish the stream and when this next 4-hour candle rolls over, I'm considering adding another short position, depending on how this formation looks at the top here. So we're now in the new contract. We're short, not hedged. We're fully short on natural gas, average price at about $3.73, and aiming for $3, where I will look to exit the short position and go long, with my view in mind that we're now trading between $3 and $4 in general on natural gas. We could go up slightly above that, we could go slightly below that, but that's my idea for a range for the next number of months, or even next year or so. So we're currently trading right in the middle of that range, actually, at 368, a little higher than we were earlier when I did yesterday's video, but we're closer to the top of the range now. So I'm starting to take my long trades off, which I've taken all of them off now, and also now considering looking to edge into additional short trades to add to the 2 short positions I currently have on. I hope that explains everything to you. Target $3. If we don't move down, target $4. And I'll be looking to sell at $4, be looking to buy at $3, and we're currently short for a target of $3 to reverse. And that's that. We're still long on URA and UEC. UEC is coming in a bit more than URA, still looking pretty good. We took some profit at the top here on URA, the uranium trade. We got long at just above 20, and we got out just around about 33. So good position on there. We only took half of our trade off here, half the profit, and I'll be looking to add some more, that other half that we just took off, the profit that we just took off. I'll be looking to add that back on, that position, the 50% position, back here at the 200-period moving average, the horizontal support level, and this little baby tiny trend line down here at around about $28.50, $28.50. So that's URA. UEC came in quite a long way compared to URA, and just dribbling down. But there's a gap there that we probably had to close in any case, this little gap here. We're in the middle of that gap now. Got a few more cents to go down to get to the bottom at $5.49. We're currently trading at $5.67. So that would be a good place to add some more long positions down at the bottom of the gap, and maybe even down slightly lower than that at the bottom of this gap. The actual gap starts at $5.26. So somewhere into this region, I'll be looking to add some more long positions onto UEC. But overall, okay, not bad. We got long down here at $4.71, and that position still remains open. And then finally, WTI, Brent crude oil, nothing has changed. New range, $50 to $70, that's what I think. And we're now trading at $61, so bang, slap in the middle, much like natural gas, trading in the middle, diddling in the middle, and it's not the best place to be. We're currently we're short on WTI. We've been short actually for the last couple of years, 3 years almost now. All of these positions are the short positions that we've taken. Apart from 2 that we took at the bottom of this channel, we took 2 long positions. We've taken profit on those longs already, and we're now fully short again from around about $62 or something like that. I'd prefer to sell WTI back up into Moab, closer to $70, $67, $68, $70. Big confluence. I don't think the market's going to be able to resist this. We're in our first blob now. My second blob is over here. All of the resistance is above us, and it's like a price magnet. Most probably the price will have to get up there before reversing. So we don't have a full position on here just yet. I'm looking forward to being able to add some more at around about $67 to $68. I'm also allowing for a move back up to the top of the channel. And if we got there fairly soon, we could get up to $74 and potentially, although I think the least likely scenario, back up towards higher, closer towards $80, but I don't think that's most likely. I think $67, $68 to sell, to add to our short position, and maybe slightly higher, closer to $70 at a stretch, the top of the channel at 74. But I think we'll probably try and hold Moab, $67, $68 for an additional sell. But we're already short there. We're short on natural gas. We're short on WTI. I'm not normally short both at the same time because they often move in different directions, opposite directions. But that's the way it is right now. And then once again, you could consider this sort of a hedge. Right, now, just a couple of these things going onto the Rand. Still long on the South African Rand, dollar South African Rand, short the Rand, in other words. Not much to say, but we've been literally moving sideways for 3 weeks. And the Rand has strengthened way beyond what it should have done, and it should recover this dollar Rand. In other words, the Rand should weaken further. US 10-year yield still trading within the range of this tariff whipsaw, and TLT struggling to get off the bottom. And VIX, I'm still looking to buy down further into closer to $12. And we're currently at 18.5, so some room for that to go down. I did point out jokingly, we have a trend line here, which VIX seems to be holding. VIX isn't a trend-following instrument at all, but it is holding this trend line. And the last time we got there, we bounced up all the way back up to 25. So are we going to bounce off that trend line again? I doubt it. I think we'll be most likely heading down towards 13 or 14, something like that, maybe even 12. And then quickly on softs and grains. Well, we're long on sugar. Sugar is a concern for a number of people. Let me go to the weekly chart for this. Not really so bad. We've got a sugar Moab as well. Moab's on 3 charts now. Sugar Moab, mother of all breaks. If we break down there, sugar can get quite a lot lower. But we haven't broken below there just yet. And we have a falling wedge pattern. Whether it's going to hold here or not, I don't know. We've got a couple of tranches. We took some profit on that last rally back up to the top trend line. We haven't reached that top trend line again. But if we do, I'll consider taking some more profit off on sugar and letting this one just faff around during the coming season, because I don't think it's going to be terribly exciting from here on. We're also short on cocoa. I put all these up in the last video and on X, so this is not new info. And I'm looking for this move to complete. Really just that, just for a move to continue on down there. We did take some profit. Off there. We're short from there. We want this to move down. And basically, it's just a game of wait and see. Now, the reason we sold at the top there, and it's a funny color, don't know why, I think it's because of the pink background. It's actually meant to be a red arrow. It is red. But the reason we sold there was simply because it was the top of the range. We're looking for a move back down to the bottom of the range, another bounce, a bit more bouncy stuff around there, and then eventually a breakdown to more sensible levels, and the Fibonacci level at about 4,300 or so. That is the 78.6% fib of this entire move, up from the lows to the highs. So still short on cocoa and on coffee. We took profit on coffee yesterday, half of it, reaching the top of the channel again. And now we're looking for the next leg down. We haven't got into this channel since the 4th of December. So we have not got into this channel since the 4th of December, or closed inside it rather. Did try over there a little bit. Anyway, we took some profit there at the top of the channel, and now we've moved inside the channel, and we may have a little bit of a bounce here. That's why we took some profit. And then I'm looking for this move to continue to the bottom of the channel, like we've done on previous occasions. Look back over here on the left. So back down to the bottom of the channel, a bit more bouncy, and then a move down to proper trading levels in the 200s and low 300s, something like that. So that's going pretty well so far. We managed to get some good profit on various bounces, trends, counter trends on both coffee and cocoa. So I'm happy about that. We're also long on corn, faffing around, hasn't done a lot. We're long on, we have nothing on soya. We're long on wheat. Wheat's trying a bit, but also looking a bit pathetic. We do have a falling wedge, though. This is a great pattern, by the way, and we failed to reach the bottom of the wedge on this last occasion. Doesn't mean we're not going to try again, but so far we failed to reach it. This is a massive bullish reversal pattern, and I expect wheat eventually to break up through about 620, and then through 720, and then possibly through 820, all the way up back up into the zone over here. So, but we've got to get above and close above that downward facing trend line. It's a really good technical pattern, big downward facing descending triangle. falling wedge, whatever you want to call it, similar sort of patterns, and that should break out through the top. We've got nothing on orange juice, and we have a long position on cotton too. And nice move here on cotton, by the way. Big channel breakout, lots of thrashing around. That creates the sort of turning point right here. And we broke up above the channel, gapped up above it, gapped down below it, all that sort of thing. And now we're moving sideways across the page. I'm hoping that the next move will be up with this double bottom, inverse, spike low, head and shoulders type pattern. A conglomeration of all sorts of things with gaps and violent moves down here at the bottom. I kind of like that chart still. So that's cotton. And that's all the other things. So going across quickly while we're here, back to the natural gas chart, collapsing down as we speak. That's what we want to see. And we're short 373, I think it is. And we're currently trading at 365 after having taken 20 cents profit from the top down to the bottom, and then another 20 cents from the bottom back up to the top. And we're now short again, looking for more than 20 cents on this occasion, looking for a move down to $3. That should give us 70 cents or so profit on that trade. And that's it. Now, folks, I'm going to give away, I'm not sure if I did, I think I did give away 5 new memberships. I'm going to try and get to some questions, and I don't know if I can. They don't seem to be popping up here. So if I don't get to your questions, I do apologize. Let me quickly read through them. I'll at least greet you. I can see the names. Good day, Roby. Lovely to see you from Maryland, USA. Wonderful place. Lovely to see you too. Good day, Noratu. Max from the private group. Lovely to see you, Max. We chatted this morning in the private group. Good day, Shlopsky Rosam. Lovely to see you. Roby, thanks for doing these streams. Learn a few things all the time. Thanks, Roby. I appreciate that, mate. Emily Trading, good day to you as well. Tim, good morning, Tim. Nice to see you as well this time. Malar Products, excited for the natural gas update. Well, I hope you got that. We talked about natural gas extensively. Is there a bump and dump pattern forming on gold? Alexandre says. Could well be, Alexandre. I don't know. Probably not. I think this is an impulse move, the start of a new move up. I don't know. I'm not betting on that. As you know, I'm hedged, so I don't have any bets on gold right now, being a bit of a wuss, bit of a sissy. But it looks like an impulse, a drive, a start of a big move, maybe wave A in an Elliott ABC, either corrective wave or it could be an ABCDE pattern. But if you look at silver, massive move up, and gold with it, and copper, also a big move up yesterday. So right across the board on metals, I don't think that's a pump and dump on gold at all, considering there's massive volume going on in the gold market as well, in central bank purchasing and so on. So if anything, those bumps are more likely to be significant volume bumps. I haven't looked at the volume there. You can have a look. All right, Ray, good afternoon to you, Ray. Lovely to see you. Nice to see you as well. Alexander, what's your take on the VIX? Okay, I did talk about the VIX. We want to get down to about 12 or 13 on the VIX. James, I want to know the entire June month view on gold. You want to know the entire June month view on gold. Well, I don't know, Joy Deep. I'm sorry, I can't help you that. I don't know what gold's going to do in the next 5 minutes, let alone the next entire June month. So I can't help you there, but I did give you my views on gold, and I think we will eventually have a significant correction. Whether that's going to happen right now or whether we've got to get up higher to 3,800 or not, I don't know. I think we could. I think basically it's a 50-50 either way at this moment. But a lot of central bank gold buying is pushing the price up. The DAX is looking heavy. Yes, it is. Damo, welcome to you as well. Hello, Sona from India. Lovely to see you too. Good day, Camille Fedjak. Hello to everyone. Hello to you too. Good day, Martin. Could be a double bottom on XRP. Could be, Martin. XRP double bottom. Let's have a quick look. Where are you, XRP? Yeah, look, I mean, a double bottom is never clear until it's a double bottom. And you only know when something is a double bottom like we've got here. I mean, it's trying to form a double bottom. It is the same level, same sort of similar price action off that level. But you only know it's a double bottom once the market moves to a new high. So, we could do this sort of thing, then it wouldn't be a double bottom. Then it's just a range. But if we do that, then it is a double bottom. And but we've got to get above that high in order to confirm that it is a double bottom. And that's why double bottoms, head and shoulders, easy to try and sort of identify them in advance and pick them out and draw them on your charts, but they're never confirmed until they actually are confirmed by a new high or a new low and a close above those levels or below those levels. So be very, very careful of trying to identify particularly double, triple bottoms, head and shoulders patterns, any candle pattern really, or any chart pattern, technical pattern, before it's had a chance to play out and to complete. And many traders make that problem, have that problem, make that mistake. They get into a trade before the pattern is set up. They see a pattern. You can draw any pattern on any chart in advance. I could draw a head and shoulders, an engulfing candle, a spike high, one up, one down, Bollinger Band pierce. I can draw any of those patterns on any of these charts for you right now and make it look like it's likely to happen. Like if I draw those patterns in, you might say, yeah, that looks like it's very possible, it's probable even. That's more likely to happen than not. But these are just ideas and chart patterns that we draw in because we like to recognize patterns, we like to see things that we've seen before, and we like to try and predict the markets. Don't do that too readily, particularly with double bottoms and head and shoulders patterns and so on. You can preempt them, but then you should be day trading them and picking the turning points using shorter time frame charts or trading precisely at the level that you've identified. For example, if you were going to go long on XRP based on the double bottom premise, then you would have to be waiting for that level to be touched, which it was, almost to the penny, I would suppose. Let's say it is to the penny. You could have then entered your trade right there, preempting it with a very tight stop loss or hedge in case the very real scenario that you're wrong occurs. But then in that case, you've picked a level, you predicted a turn. Most of the time you will get a turn at those levels, but sometimes, and a lot of the time, those turns don't last and the market carries on and resumes in that direction. But at least you got in, and at least you have a very tight stop loss, and at least if the market does get going, you're in the trade. You got it. You got into it. It's one way of trading, picking tops, picking bottoms, but you have to manage your risk incredibly carefully. And if you're going to pick this as a bottom, you should have picked it 4 candles ago, and you should be long already. So yeah, it might be a double bottom. We'll only know it once we've closed above this recent swing high at 265. Until then, it's just a retracement. It could be a bear flag. It could be a triple bottom. We could be just moving into a range. We could be heading much, much lower. Who knows? So just be very, very careful of that and don't preempt these patterns. If you're going to preempt them, as I said, get in on the trade at the precise level that you've picked. Don't wait. Don't look for a reaction. Get in without a reaction. And, you'll see a lot of people, some of the folks I know quite well on YouTube, who will say, react, don't predict. Patience is a virtue, all that sort of thing. Yeah, all of that's completely true. But you can predict the market sometimes and get into a trade and react to a price level or a support level, resistance level, a number on your chart. You can react to that and pick that number in advance if you want to. But you have to be very careful that you manage your risk. And that's the second part of that, managing the risk, is where most people go wrong. So, yeah, that was a long answer for a very short question. So, yeah, so you can all hear it very well. Thank you. I appreciate that. SRPT, you're long. I don't know what that is, MD. I don't trade that. If you could just clarify, that would be great. Emily thinks that's funny. G'day, Ole from Germany. David McNamee, good morning to you too. Kevin from the UK. Nice to see you, Kevin. And Carlos, what's your take on Taco? I don't trade Taco, Carlos, I'm afraid. Can NG poke $4 again? Sure, it could, Alexandre, as I said earlier. No questions. Great stream, though. Thanks, Steve M1N1. Damo from Ireland. Lovely to see you here as well, Damo. And Kato Sodza from Poland. People from all over the world, isn't it wonderful? How is South Africa? Are you in Cape Town? South Africa's okay, Light Chaser. I like it here very much. There are big problems in this country, big problems in all countries. Some of the problems here are bigger than one would like, but I like it here nevertheless. And so far, we're all safe and happy, and it's a good country to live in. Really nice, wonderful people, and all of us are wonderful people. Every shape, every color, every belief, every size, every gender, all of us. We're all great. So I like it here. But there are some big problems. Yeah. So, yeah, thanks, Zed Pepper. Yeah, safe down in South Africa for now. South African living in the UK. That was Light Chaser. South African living in the UK. Okay, well, UK is all right. My folks, my family, my children, my grandchildren, all of them are in the UK. It's not a place I like very much, but I'm happy that they like it there. Sorry for arriving so late, says EGT. This is very interesting. Congratulations for your work. You have a long-term subscriber. Thank you, EGT. I really appreciate that so much. And yeah, it's wonderful, heartwarming. Appreciate it. It's you folks that make this worthwhile for me to do. I don't make any money from YouTube, by the way, just in case you think so. I've only got 11,000 subscribers, and I make about $5 to $10 a video from whatever YouTube does with the adverts. So that's it, and that basically pays for my charts. So I don't make any money from it, but I do enjoy it, and I do like sharing it, and I appreciate all of you who come along, make the time and the effort to be here and ask questions, and also encourage me. It's important that you do that, and I do appreciate it. We all need encouragement. Good day from Poland to Nurbol Jankie and CS Tech 01. A second question, what about copper? All right, we've covered copper. If you want me to talk about copper some more, we can do so. USPLN, USDPLN, I don't trade that either. Pharma stock. Oh, pharmacy stock. Yes, okay, all right. That's the answer to the previous question you were asking about. Yeah. I don't have any info on that. Sorry, MD. I know that pharma stocks are pumping up, and I know the story behind all of it, but it's not a. I don't particularly like trading pharmaceutical stocks in general for various reasons, not just because of ethical reasons, somewhat, although they're not strong. I don't have strong ethical reasons, but also just because of the way they trade, the nature of those markets, and the hype, and the erratic moves, and there are some good runners that move quite technically and quite well, but generally it's not a niche, a market niche that I'm particularly interested in. Buffalo, New York. G'day, Buffalo, New York. Gabriel. Buffalo. I've never been to Buffalo. Yeah, nice. I know, awesome. Fantastic. Okay. And then the Dow Jones. I'm also not trading the Dow Jones, Light Chaser. I occasionally trade it, but I'm not trading it currently. I trade about 35 to 37 different instruments, and I can't trade everything. That's why I don't have a huge number of stock names, because I prefer to trade the indices. These three particularly, the Dow not so much, and then a few of the tech names. So I've got 8 on here already. I don't have space for much more. I've got 6 currencies, 8 there, got a whole bunch here, and there's a whole bunch that aren't even on here. Natural gas moving down quite sharply as we're talking. So folks, have a great trading day. Markets will be open in 45 minutes time, and I'm expecting, I don't know what I'm expecting actually, but all eyes are on the stock markets. These are looking quite firm. I don't mind these moving up because we've got some longs on MSTR, decent position on MSTR and NVIDIA, and those will move up in sympathy if the stock indices move up. These I can hedge. The German 30 will behave differently to the SPX and the NASDAQ because it trades differently. That one looks quite good for the short side still. These ones not so much. Maybe the NASDAQ and the S&P have to pop up. But what I do like about that scenario really is that we should see Bitcoin follow suit. And I'd like to see this week really quite a strong rally in Bitcoin, XRP, and Ethereum. And I think we're going to need the stock markets to go along with that in order for that to occur. NASDAQ and the S&P are looking quite positive. German 30 not so much, but you never know, that might just pop up as well. But we have longs on some of the other names. So we're going to have to be a little bit careful with the NASDAQ and the S&P in terms of potential hedging today or early this week. But at the same time, that should help my crypto trades. And at the same time, that may also push down gold, silver, and push up copper. So, if people start moving back into risk assets, crypto, stock names, Mag 7 type stuff, we may see gold pull back, maybe silver, but not as much as gold, because a lot of those names are supportive of copper and silver in terms of demand. So yeah, a very super interesting plays going on. And then of course we've got the tariff stuff that we have to deal with as well, and all the odd tweets that come out from time to time from Donald Trump and what he thinks about tariffs, China, Russia, etc. And of course, the oil and gas industry is intimately affected in all of these scenarios, not only there, but in the Middle East as well. So it's all up for grabs. It's all quite chaotic. But at the same time, traders love volatile markets. We love to see action. We love movement. We don't like those days when we're getting, like 30 pip or bip moves in a day on the euro or on gold. We want to see those days where we get 100, 200, 300 bips or percentage in points on an instrument, and that we can trade with momentum, directional bias, and we get going. We've seen quite a lot of that recently, but it's not all that predictable. But it is moving, and that's good for traders. So with a bit of luck, we'll see more volatility, continued volatility, but more stable directional moves, not so much thrashing around like we've seen recently. This thrashing around is not good for traders in general, and the market won't stay like this forever. It will eventually smooth out, settle down, get back to some normalcy. But in the meantime, there are a couple of things that we can do to make some plays, make some money. And we talked about a few of those today. Have a great trading day, folks. And if you did enjoy this, please, I'm begging you now, press the like button, press the subscribe button, and press the join button. For $1 a month, you can be part of this YouTube community. And we do extra special things for members. And we're doing more and more of that going forward. So have a great trading day. And hopefully I'll see you in the video tomorrow. We'll have a live stream for members only tomorrow. And I'll also be doing a technical video. So I'll see you there. Take care. Good luck. And